Hey there, this is David Cox, Senior Portfolio Manager at Financially in Sync at Raymond James in Waterloo, Ontario, Canada. Today on the webinar, where do we investors stand? It is Friday the 13th, it is March the 13th, but yeah, it's still Friday. Boo. Let's get in. So we'll start off by intermarket analysis here. Oil, big, of course, up 18.2% this week. Commodities in general being pulled higher with oil, of course, dominating. Stocks definitely down. You can see the short-term trend has been downwards here. And just a reminder to pause your video player at any time to dig in for more information. Now on the left side, here's crude oil on the weekly chart. Going back 20 years, and so you can see here we've had a move because crude oil has been down for the last several years. I came back from a meeting the other day, and a colleague said, "Oh, crude oil is in a downtrend now." And I said, "I don't think so." And so we plotted it up, and sure enough, on the right side, you can see there's crude oil, and what this 20.7% is. That was the reversal. Crude oil shot up to about 120 bucks a barrel, and then reversed, 20%, which is pretty quick. It actually reminded me quite a bit of silver, which also went to $120 very recently. And so again, this is an uptrend, and it has continued to be an uptrend because, of course, there's a lot going on over in the Middle East, and we will get to that and more. I wanted to follow up here. This is the returns since February 27th. So that's the day before the U.S. and Israel attacked Iran. And the reason I want to show this is because we want to understand what's moving, right? So volatility is moving, oil's moving, Bitcoin is up 9%. Yields, I really am interested in this. So again, in the old days, right, what happened was bonds went up in terms of as investors sought safety and they sought to sell their stocks. Now they're selling bonds, right? And yields are going up at the same time. I find that fascinating. Gold is down, stocks are down for the most part. Let's move forward. Here's the sectors, or kind of, actually, these aren't sectors, these are the bigger picture stuff. So take a look. There's the gold miners down on the bottom here. So since the same time frame, they're down about 14%. You can see silver down there. What's been holding up here? I put a couple stocks on here. Some of you might have seen my BNN presentation. I'll just kind of touch on a couple of those. There's Nutrien. These fertilizer stocks have been pretty strong. There's Broadcom actually up 5%. There's Tesla down 1.9, and again, Walmart outperforming the market. So again, the markets move. We do not always know exactly which way they're going to move, of course, but we can use the tools. We can use the inputs and see where demand and supply is flowing, and I think that is very important to us. Here's Bitcoin on the monthly chart, and the reason I want to zoom out here is because I like to use RSI 5. You know that. This happens every few years. You get an RSI 5 sale, we'll call it, and so we've been in that sale zone here for a while. And again, Bitcoin at this point continues to be in an uptrend, bigger picture as far as I'm concerned. And again, I just want to remind you that it doesn't matter what asset or stock it is that, as investors, as humans, we tend to be emotional and we tend to view sales as, fearful moments with which to run instead of run towards something. And so again, I think I always like to use the grocery example. When a sale is on at the grocery store, people tend to run in and take advantage. But when the sale is on in the stock market, they tend to turn the other way. Because here's the S&P 500. You can see here on the weekly chart, we tend to get that sale about once a year, and we are currently in that zone. So the S&P 500 is on sale. Now, does that mean it does it go lower? I don't know. We don't know that. What we do know is that there has been some selling to this point. And so again, if you're sitting there fearful and thinking about all the uncertainty, well, you're not alone, obviously, because that is what is the headlines that are dominating. And certainly the market forces have already gone and started to show that. So I want to point this out. I think this is very interesting. So I've got the Canada 5-year, the Canada 10-year. So these are yields, and we've got the US 10-year here, okay? So the bottom line is that the red circles are when the Bank of Canada and the Federal Reserve started cutting interest rates. Now, I believe in Canada, since September of 2024, we have had 8 cuts by the Bank of Canada, and I believe the Federal Reserve has cut interest rates 7 times. So as investors, as borrowers, right, people who borrow for houses and lines of credit, we pay attention to this. We pay attention as the politicians tell us they want rates lower and they're going to force them lower and they're going to push for a vote and so forth. We hear all this stuff. It's all rhetoric. And at the bottom line is what I'm trying to show you is you look over on the right side of your screen. Since those rate decreases began, yields, okay, so actual 5- and 10-year yields, which are made by the market, not by the Bank of Canada or the Federal Reserve in this case, they are higher, okay? So despite all those, drops, yields are higher. And I think this is very, very important. We are in a different environment than we were for 40 years as interest rates fell. Here's the volatility index. So again, we're back into the zone here, which is kind of interesting. We don't usually have a lot of signals like this. We've had several signals where we've had the volatility spike up. We haven't spiked. We actually, I believe volatility topped out here on Monday at this point. Of course, it could move higher, but the bottom line is stocks are oversold. Volatility is into the zone, and what we want to see is a settling of the VIX, because the VIX has been trending upwards as it rises here gently. Let's just focus on a few energy stocks, which have of course been very, very strong. So these are a couple of all in sync names that clients own: Occidental, Imperial Oil, Valero, You see green circles representing buy points. Bottom line is it's the strongest sector happening. And so again, we certainly want exposure to those strong areas. And just another reminder that, you know, areas like the S&P 500 are very unexposed to areas like energy, very, very small weighting in there. A couple of other stocks just from a long-term trend following standpoint. These are weekly charts, you know, from Japanese semiconductors on the left, Advantest, HCA Healthcare in the US, and then on the right side, we've got Caterpillar. These are all uptrends. I've plotted them in the bottom panel versus Canada. And again, I've changed the denominator. Why? Well, because Canada's stocks are outperforming US stocks. And so we want to change the denominator when we look for relative strength, because we want to make it harder for our stocks or for our positions or assets to look like they're doing better than the denominator or the index we're using. I want to point out Broadcom as well. Now, some of you saw my BNN presentation, and I think the host kind of put up a chart here that didn't sort of really kind of help understand what exactly I was referring to. So remember, we can see different time frames on charts. The left side, we've got a weekly chart of Broadcom, clearly in an uptrend, clearly higher highs, higher lows. On the right side, we've got a stock here that just kind of dipped below the 200-day moving average for the first time in a while and came back above there as it reported earnings a week and a half ago. I love these two stats here from Market Surge. One is what I call 4 quarters rising, which is the number of institutions that are continuing to pile into a stock like this. I think this is about $1.5 trillion company. So it is one of the larger companies. You can see the earnings here on the bottom line. They made 28% year-on-year earnings growth. And again, the sales growth just continues to be impressive. So big picture company that is actually pulled back here in the intermediate term. And I think that's interesting. Again, I just like this yesterday. This is Ryan Detrick from Twitter. And you can see here, he pointed at the seasonality here. If you look at the last 20 years, stocks on average have bottomed around March the 12th, which was actually yesterday. So this kind of content, you know, which is basically just data, tends to cause a lot of frustration among those that are trying to bet against what has been a very strong uptrend for the last few years, and again, try to sort of pile on with all the negativity. So I would encourage you always to, again, be objective as we look at these things, as we look at markets, and understand that, you know, the headlines that you're reading, the headlines I'm seeing, they're baked in, right? Those are not novel news forces, and we need to understand that as investors. Finish off with Sector Watch. You can see there's the energy stocks up at the top of the list. Canadian energy stocks outperforming U.S. energy stocks. Everything else is down. There's the Canadian or U.S. banks rather on the bottom. You can see the trends, and we will go from there. A couple of upcoming events. I'm going to be at the CMT Canada Quarterly Summit speaking on March the 26th, and the week after, I'm been asked to speak at a Village Media event that is in Guelph. If you'd like more details, do let us know. But I'm going to talk about leverage and borrowing. Please follow me on X. I'm at David Cox RJ. Thanks again for your time this week. This has been David Cox, Portfolio Manager at Financially in Sync in Waterloo, Canada.